Welcome to the deep dive. Today we're diving headfirst into the world of high-stakes stock trading, specifically how one individual managed to make, well, tens of millions.
Tens of millions, yeah. It's a staggering number.
It really is. Our focus is on Kristjan Qullamaggie, probably better known online as Qullamaggie. He's a self-funded independent swing trader from Sweden who's achieved, frankly, extraordinary success.
Going from, almost nothing to the eight-figure club, as they call it.
Exactly. And our mission today is to really go beyond the surface of his seemingly simple methods. We're going to explore his specific trading setups, his incredibly rigorous approach to risk and position sizing.
Which is key. Absolutely key.
And we'll also get into an exclusive third-party data analysis of thousands of his actual trades.
Yeah, this data is fascinating. It really lets us peek behind the curtain.
Yeah, totally. It helps uncover those hidden nuances and the psychological discipline behind it all. The goal is really to give you, the listener, a truly informed shortcut to understanding what it takes to find those big home run trades.
You know how someone goes from a security guard with $5,000
Right, just $5,000
to becoming a multimillionaire. Especially, and this is the kicker, with a low win rate.
Yeah, we'll definitely unpack that and what it might mean for, your own learning journey if you're interested in trading.
It's quite a story. And look, the data really shows it wasn't overnight success. It's about persistence, a very structured evolution.
Okay, so let's start at the beginning then. He kicked things off around 2011, right, with that $5,000.
That's right. And it wasn't smooth sailing. He blew up that account and a few more small ones after that, like 3 or 4 times in the first couple of years.
Wow. I mean, the emotional toll of that. He talks about having scars for life from those early losses. How critical do you think those failures were?
Oh, absolutely crucial. I mean, look, lots of new traders struggle, right?
Yeah.
But most quit. His persistence, that was different. Those failures fundamentally taught him about the pain of, uncontrolled risk. It became the absolute bedrock of his later method.
So that pain was kind of forged into discipline.
Exactly. And his move from day trading, where he actually made his first million.
He made his first million day trading.
He did, yeah.
Yeah.
But he switched to swing trading, not because day trading wasn't working. He was quite clear about that. It was because swing trading offered, in his words, less effort and was much more scalable.
Less effort. Okay.
Yeah, he even calls himself a lazy person, just looking to make the same money with less work. It sounds funny, but it highlights this strategic choice for efficiency, long-term thinking.
A lazy person who apparently spent thousands of hours studying charts and building a database, that's some serious dedication to being lazy.
Well, right. That's a paradox. But it leads us straight into his core philosophy, the home run trader idea.
Okay, yeah, this part's fascinating. His win rate is surprisingly low, like 25–35% in recent years. So the obvious question is, how on earth do you make tens of millions if you're only winning, say, a third of the time? It just doesn't feel right.
It's totally counterintuitive.
Yeah.
And it requires a huge mental shift for most traders, I think. We all want to be right often, get that validation.
Yeah, it feels good to win.
Of course. But Qullamagge's approach teaches you to be okay with being wrong a lot, as long as those losses are tiny. Because the market works on power laws, a few massive wins will just dwarf all those small losses.
So the big wins pay for all the little mistakes.
Pretty much. His data suggests something like maybe 15–20% of his trades generate the vast majority of the profits. So a few huge winners offset many, many small losses. It changes how you feel about losing. It's just a business expense.
Okay, that reframes losing completely. So how does he manage this? Let's get into the specifics, the position sizing, the risk rules. He's got strict rules, right?
Very strict. He states, never more than 30% of his account overnight in any single stock or ETF. Most positions are actually smaller, maybe 10–20%.
Okay.
And the crucial part, rarely risking more than 0.25% to 1% of the total account on any single trade. Maybe 1.5% for smaller accounts starting out.
0.25%. That sounds incredibly small.
It is. And interestingly, the deep dive data we looked at this was 977 trades from 2014 to 2017. It showed he was often even more conservative than that.
Really?
Yeah. 7 out of 10 trades risked less than 0.25%, and 9 out of 10 risked less than 0.75%.
Wow.
Yeah.
So almost all trades were risking tiny fractions of the account.
Exactly. And this really pushes back against that idea that you need to take huge risks to grow a small account fast. It shows that real comfort, the real edge, even at his level, comes from these almost negligible risks per trade.
Yeah.
You really don't have to swing for the fences every single time.
Yeah, that's powerful. So consistent low-risk entries. Frequent small losses are fine because the strict risk management builds the foundation for those massive returns when the few big ones hit. It's totally different from the usual advice.
Precisely. It shows compounding small, controlled risks while letting winners run. That's the path. It's a marathon built on meticulous loss control, not a sprint.
Okay, so the discipline is clear, but what is he actually trading? If you're listening, you're probably wondering that. Let's move on to what he actually hunts for.
Right, the setups.
He talks about 3 core patterns, calls them timeless setups, claims they've worked for over 100 years all across the world. Simple concepts, he says, but hard to master.
Yeah, and this gets to how traders build conviction, doesn't it? He didn't just find these patterns one day. He built this huge Evernote database, thousands of screenshots, going back decades. Spent over 1,000 hours just building pattern recognition.
1,000 hours, just looking at old charts.
Basically, yeah.
Yeah.
He fundamentally believes trading is all about pattern recognition. This wasn't just theory for him. It was a massive, almost academic effort to train his eye on historical data.
Incredible dedication. Okay, let's break down the setups. First one, breakouts. He describes it like a stair-step pattern. Stock makes a big move, say 20, 50% or more, then goes sideways for a bit like it's catching its breath.
Consolidating again.
And then boom, another powerful move up. He gives examples like Tesla in 2020, MNKD in 2013, even AAXN way back in 2004. These are just rare flukes.
No, and to find them, his process is systematic. He scans weekly for the absolute strongest stocks, top 1-2% over the last 1, 3, and 6 months. The idea is simple. The stronger the stock, the better. He wants stocks already showing leadership and momentum.
Okay, that makes sense. Look for strength. What's the next setup?
The episodic pivot, or EP. This one's usually triggered by some kind of unexpected good news.
Like earnings beats.
Exactly. Or better guidance, positive biotech trial results, maybe a favorable government decision, something that fundamentally changes the story for a stock, especially one that's been kind of neglected.
And this news can kick off big moves, right? Like multi-month or even multi-year runs.
Potentially, yes.
Yeah.
The key criteria he looks for is a big price gap, up, say, 10% or more, on really heavy volume. You'll see it in pre-market or right in the first 5-10 minutes of trading.
Got examples?
Sure. Classic ones are like NVIDIA in 2016-17, FSLR in 2007, BB back in 2004. But he cautions it takes time to get good at these maybe 4 to 8 earnings seasons, like 1 or 2 years, because you need to understand the story behind the gap, not just the technical pattern.
Right. Context matters. Okay, and the third one. You said it was the riskiest.
Yeah, the parabolic short. Though sometimes you can play it on the long side too. Think of a rubber band stretched way too far. A stock goes almost vertical, up maybe 50, 100% plus in just days or weeks for large cap, or even, 300% to 1,000% plus for small caps. Often it's up like 3, 4, 5 or more days in a row. Total exhaustion move.
So you're betting on the snapback.
Exactly. Betting on a reversion to the mean. A famous example was GBTC back in 2017 during the Bitcoin mania. But because these moves are so sharp and fast, this setup requires extreme discipline. It can go wrong very quickly.
Okay, so those are the 3 main setups he's looking for. We understand the what. Now the how. How does he actually trade them? I mean, swing trading? You often think you set your orders, maybe check later. But his entry data, it tells a different story.
It absolutely does. It's quite surprising, actually. This gets us to what he calls the power half hour.
The power half hour.
Yeah. Looking at over 2,000 of his entries and exits, the data shows this really aggressive front-loaded approach. Almost 1/3 of his trades are entered in the first 5 minutes after the market opens.
1/3 in 5 minutes.
Yeah.
Wow.
Half are in the first 15 minutes and about 2/3 within the first 30 minutes. This isn't passive set-it-and-forget-it swing trading. It's active, decisive, often using market orders to get in fast, right at that confirmation point.
So much for the lazy trader, huh? That's a lot of focus right at the open. How does he pinpoint the entry?
He talks about buying on opening range highs, the ORH, using the high of maybe the first 1-minute candle or 5-minute, sometimes even the 60-minute candle. But, and this is really important, only when the breakout on the daily chart already looks obvious. He's not trying to predict it. He's waiting for that immediate confirmation of strength.
Okay, wait for proof, then act fast. What about getting out? The exit strategy.
Right, so the initial stop loss is always the low of the day. Always. And crucially, it's never wider than the stock's typical daily movement, its ATR or ADR.
Why so tight?
His belief is that really good breakouts should work almost immediately. If they pull back below the day's low right away, the setup's probably failed, so he gets out with a very small defined loss.
Makes sense. Cut losses quickly. What about when it works? When he has a winning trade?
Then he manages it carefully. Typically, he'll sell maybe a third to a half of the position after 3 to 5 days, just to lock in some profit, reduce risk.
Okay, bank some gains.
Then he moves the stop loss on the rest of the position to his entry price. So it's a risk-free trade from that point.
Right, break-even stop.
And for that remaining part, he trails it, usually with the 10-day or 20-day moving average. He waits for the first close below that average, not just dipping below it during the day, but actually closing below it. That's his signal to exit the rest.
That close below detail seems important for riding trends longer.
It is. It helps filter out the noise. And connecting this all back, these methods are very sensitive to the overall market. He's clear they work best in uptrending or sideways markets. They really don't work well when the market's falling.
So knowing when to just sit on your hands in cash is vital.
Absolutely. Understanding the market weather is paramount. It dictates how aggressive he'll be, or if he trades at all.
And he also layers in some fundamental conviction, right? It's not purely technical.
That's right. Momentum is king, but knowing the story helps. If a stock is tied to a hot theme like lithium back then, or EVs, or it have really strong earnings growth, that gives him more confidence to potentially take a slightly larger position or hold it longer.
Right.
It's like the fundamentals provide the fuel for the momentum.
Okay, interesting. So momentum first, but fundamentals add conviction. Now let's get into some of the really juicy stuff from the deep dive insights. Things you wouldn't necessarily see just watching his streams.
Yeah, this is where it gets really interesting, I think.
His streams can seem pretty action-packed, right? Lots of focus, charts flashing. But the data about his actual trading pace, it paints a different picture.
It really does. This idea of exposure tempo was a big eye-opener for me personally. We looked at over 2,000 entries and exits.
Okay.
And found that on 17% of his trading days, he made no net position changes at all.
17%. So almost 1 in 5 days, nothing.
Yep. And almost 2/3 of the days, he had 2 or fewer entries. Half the time, his net position change for the entire day was just 1 position, or even less.
That's surprisingly slow, deliberate.
It really is. It completely shifted how I thought about needing to be active. It shows that success isn't about constant button clicking. It's about patience, precision, waiting for the really good opportunities.
That definitely reframes the action-packed stream idea. What else did the data show? You mentioned progressive exposure.
Right. This was clear too. The number of positions he holds scales up and down with the market trend. So in a strong bull market, he might build up to, say, 20 or 30 open positions, actively adding exposure.
Getting aggressive when the wind's at his back.
Exactly. But after a market correction, or if the market's choppy, he might only have a handful of positions, or even none. He even mentioned a personal rule of thumb. If he finds himself holding 30 positions, that often signals to him that the market might be getting overheated and due for a pullback.
Wow, like a personal market timing indicator based on his own activity level.
Kind of, yeah. It's like this self-calibrating barometer built from experience and tracking his own trading.
This leads to the mental game, which is huge in trading. The data on drawdowns. This was maybe the most shocking part for me.
Oh, absolutely. Even with his incredible returns, Qullamaggie estimates he's in a drawdown, meaning down from his peak account value something like 90 to 95% of the time in a normal market.
90 to 95%.
Yeah. And even in a good market year, maybe 80 to 85% of the time, the actual data analysis we saw found it was around 80% of the time.
So think about that. Most of the time, even this incredibly successful trader is technically losing money relative to his highest point.
Exactly. He even went through a painful 10-month drawdown back in 2015. 10 months. Even though he finished that year with triple-digit returns overall, it just shows the brutal psychological reality.
That statistic is just mind-bending. It speaks volumes about the mental toughness required. It's not just about finding winners, it's about enduring the periods between the winners.
And he's open about his own struggles too. He admits to sometimes overtrading or overriding his sell rules because he gets impatient. He literally said, "I wish I was a robot that just followed the method 100%.
It shows that discipline isn't something you just achieve once. It's a constant battle, isn't it? Even for him.
Absolutely. It never just gets easy. Which brings us to how he handles scaling and mindset as his account grew.
How does he manage trading bigger size without letting the dollar amounts mess with his head?
His approach is quite unique. He systematically doubles his risk and position size as the account grows. So the percentage risk stays consistent, but the dollar amount increases.
Okay, a methodical scaling plan.
And he's careful with margin. Only uses it when he feels he deserves it, basically, when things are going well, when he's trading well, not as a way to recover losses.
Earn the right to use leverage.
Precisely. And his core advice is to always think in percentage terms. Forget the absolute dollars. Focus on the percentage gain or loss relative to your account size. This helps keep the decision-making objective, stops you from getting scared by the bigger numbers. For me, that was a big takeaway, earning the right to scale, thinking in percentages.
It's a powerful psychological tool. So, wrapping this all up, what does this deep dive into Quullamaggie's world mean for you, our listener?
Well, I think his journey is a powerful reminder, isn't it? That true mastery isn't just about finding some secret setup.
Right. It's about the relentless, often really unglamorous work, building conviction through thousands of hours of study.
Meticulously managing risk, like we saw with those tiny position sizes.
Controlling your mind through those long drawdowns, knowing that most of the time you'll be down from your peak.
Yeah, understanding that even the best spend most of their time psychologically underwater, so to speak.
It really poses a fundamental question, doesn't it? Are you willing to put in those thousands of hours, endure that mental grind to develop your own edge?
Or are you just looking for the next shiny object, the next silver bullet?
It's definitely something to reflect on. We hope this deep dive has given you a lot to think about.